Hello and welcome to FX Evolution's PRECIC Trade Planning System demonstration video. The PRECIC Trade Planning System is one of the most market-adaptive trading tools available. It not only calculates the important inputted variables of the current market conditions, but also gives you a probability of success score based on the information provided in the form of a star rating. Today I'm going to walk you through a recent trade we placed using the PRECIC Trade Planning System on the S&P 500 to demonstrate how it works and what it tells us about the current market. So let's go through each of the steps and break down this trade. Firstly, we enter the instrument we are trading, which in this case is the S&P 500. This information is important because the PRECIC algorithm will allocate a certain amount of points to each instrument, depending on which direction you are trading based on the current trend. We then enter the current trend of the time frame we have identified the trading opportunity in. In this case, we are looking to trade a double bottom on a 4-hour chart, so we can look at this time frame and see what the trend is doing. In this case, the last sequence is a series of higher highs and higher lows, so we can select uptrend. Next, we select the candle that best represents the last daily candle on the S&P 500. We can see here that this is a bullish candle, and we can select bullish from the options. The next question asks us if we are going long or short. Because we are trading a double bottom pattern, we can select long. We've now given the PRECIC algorithm the information it needs to process the trend strength, and we will now proceed to the next section, which will take us to a more in-depth approach to the entry parameters on the trade that we are looking to place. The first section of the PRECIC trade planning system will look at the price action, and it asks us if there is a series of higher peaks and higher troughs in any of these time frames. As we click through the different time frames, we can see that we have a series of higher peaks and higher troughs forming on the daily chart, the 4-hour chart, the 1-hour chart, and also the 15-minute chart, so we can select all of these time frames. The next question asks us if there are any candle patterns present in the entry, location, or directional time frames. Because our location time frame is on the 4-hour chart, we need to look at the 1-hour chart as our entry time frame and the daily chart as our directional time frame. We can see here that we have a bullish harami pattern on the 1-hour chart, close to where the neckline would break, so we can select bullish harami. The next question asks us if there are any candle patterns present in the same time frames. We can see that there is a hammer candle on the 4-hour chart just below the neckline, so we can select the hammer candle icon. Here we can type any observations on the current price action that we may find useful down the track for analysis. We can then move on to the next section, which focuses on risk management. The first question asks us about the risk to reward ratio on the trade that we are looking at. Because it is a double bottom, we know that the risk to reward ratio on this type of pattern is a 1-to-1, so we can select that icon. The next question asks if there are any of these following obstacles between the entry point and the take profit target on the entry, location, or directional timeframes. To do this, we can first project where our take profit target is going to be, and then we can start to look for the potential obstacles. We can then look to see if the 20, the 50, or the 200 moving averages are between the entry point of the trade and the take profit target. We can see that on all 3 time frames, all 3 moving averages are below the entry point, so we don't have to click this icon. Next, we can look for any potential support or resistance lines which fall between the space. We can do this on the biggest time frame, as the same levels will be present on the lower time frames as well. We can see here that there is no real resistance zone to worry about, so there is no need to click this icon. Now, because the take profit level is around the 2860, we don't have to click the round numbers or key price points icon either, so we can select no obstacles. Now we can move down to the next question, which asks if the same obstacles appear between our entry point and our stop loss level. We know that our stop loss level needs to be below the lowest trough for this pattern, so we can draw this line and check for the obstacles. A quick scan through the time frame shows us that there are a few of the moving averages helping protect the stop loss, so we can click yes to this icon. We can also see that there is a support line below our entry point on the 4-hour chart, so we can also click this icon. Because the stop loss falls below the 2800 level, we can also select the round number icon. The next section simply asks if the ELD 363 system is in place. We know from our previous analysis that the directional time frame, which is a daily, is in an uptrend, and the 1-hour chart, which represents the entry time frame, is also making higher highs and higher lows, so we can select yes to the ELD 363 being in place. We now move on to the chart pattern section. We already know that we are trading a double bottom, so we can select the double bottom icon here. The next section asks if there are any indicators confirming our trade's direction. Because price is currently above the key moving averages, and they are still all tracking higher, we can click yes to the moving averages. We can also see that the MACD histogram has moved from negative to positive on the 1-hour chart, so we can also click the MACD icon. The stochastic indicator is clearly rising on the daily time frame, so we can click yes to stochastics confirming our direction. We are only allowed to include 3 indicators here, so we don't need to look any further. The next question asks us if there are any divergences on the indicators working in the trade's favor. We only have to look at the 4-hour chart to see that we have a clear bullish divergence on both the MACD and the stochastics indicators, so we can click on both icons. We are only limited to 2 divergences here, so we can proceed to the next question. The final section asks us if there are any charting techniques present which can help confirm our direction. We can see on the daily chart that there is a valid trend line in place, which meets the validation criteria of making 2 highs and 2 lows off the trend line, so we can click yes to a valid trend line. We can also draw a Fibonacci retracement on the 4-hour chart and see that the second trough landed at a 50% pullback, which helps strengthen the trade, so we can click yes on the Fibonacci icon. We are only allowed 2 choices here, so we can conclude our analysis at this point. We can then type in any final trading notes here, and we can proceed to finalizing the analysis. We can click yes to receive an email copy, and enter our preferred email address here, so we can hit the submit button. Once the algorithm calculates the score, we can see that we have a 5-star trade with a very high score of 395. Now that this analysis is complete with a confirmed 5-star PRECIC score, we can place the trade and let it play out. We will place our stop loss and take profit targets at the zones that we discussed earlier, and hit the enter on this trade once we have confirmed a close on the 4-hour candle above the neckline. We can see that this trade has taken a couple of days to complete, but given this sort of pattern, it has reached its take profit target in a reasonable amount of time. Now, of course, the PRECIC system doesn't guarantee that every 5-star trade will be a successful one, but what it does do is make you analyze the market correctly, factoring in many different elements to give your trade every chance of success. The PRECIC trade management system is available free to all of our advanced trend trading course subscribers and our foundations course subscribers.